Hey guys, what's up and welcome back to my channel. My name is Sydney, and if this is your first time joining us, thank you so much for being here. So today we are going to be talking about what the is credit. Okay, now I've had several friends who've hit me up and been like, yo, how are you rebuilding your credit on your own without going through an organization or cutting corners, this, that, the third. So I want to help you all level up and raise your credit score without any help, because it is possible. You can do it. Okay, this video is going to do three things for you guys. First thing we're going to be talking about today is what the hell is credit. Number two is why is credit even important and why should you care. And then number three, now that you have this knowledge about what it is and why it's important, what you should do to either build, rebuild, or maintain your credit. Without further ado, if you are ready to get some little financial literacy going on, then keep watching. So as I mentioned, the first thing on our agenda today is to start off with the most basic thing, and that is, what the hell is credit? What even is this thing? Why are people obsessing about it? I see the credit being mentioned everywhere, on social media, in podcasts, even on commercials, with people trying to persuade you to download their credit apps or join their credit companies. And I know that people are kind of like me when I first started and was like, what the hell even is this? Okay, so credit is basically something that determines your relationship with finances. It allows a lender to know how trustworthy you are when you are being lent money. So guys, you may be wondering, well, how do I get this credit score, and what is this credit score compiled of? And it is compiled of 5 things. Number one is payment history, and that makes up 35% of your credit score. Credit utilization makes up 30% of your credit score. Credit length makes up 15% of your credit score. New credit makes up 10%, and credit mix makes up 10%. So payment history is very simple. Are you paying things back on time every time? Credit utilization is basically, are you staying under 30%, or are you maxing your credit cards out every single time you get a chance to? You should never max your cards out. Like, maxing cards out is a no unless it's like something that you like are in dire need to do. I'd like to stay between 1 and 25% just so I can stay under that 30%. And honestly, what I end up doing with my credit cards is just buying gas. That way it's in use, it's not a large amount, I can pay it back, and it's something that I know I'm going to pay back. Okay, next is the length of your credit history. So basically, how long do you have these accounts open? The longer the better. You never want to get a credit card, use it, close it, and you never want to get a bunch of different cards, because that goes into the next thing of like new credit. These two kind of go hand in hand, and they can kind of be like mixed up real easily. But basically, new credit is whenever you have an inquiry, which I'm pretty sure you guys have heard about, like inquiries making a hard hit on your credit. Anytime anyone has to check your credit, it basically hits it. It can take a point away, 2 points. I've even seen some take 3 points. So when you are trying to do something that requires you to have your credit pulled, make sure that you really need this thing, because it does kind of bring you down whenever you have those inquiries hit your account. And then whenever you get these accounts open, you want to keep these accounts and make sure that these are accounts that you're going to be able to keep for a nice amount of time. Like I said, the longer the better. And then lastly is credit mix. So credit mix is basically how diverse is your credit. Are you able to juggle different types of payments at one time? So are you able to juggle credit cards and a car payment and a mortgage, or credit cards and a car payment if you don't have a mortgage yet? But having that diverse amount of things that you have to pay back every month. It shows a little bit of responsibility for your character. So those are the 5 things that credit pretty much is compiled of. We are going to get into our second thing on our agenda, which is, why is credit important? So let's just start off by saying, if someone is known for not paying you back whenever you lend them money, are you going to keep lending them money? Just think about that for a quick second. And that's basically why credit is important. No one is going to continuously lend you money if you are not trustworthy and if you are not reputable at paying back money that has been lent to you. So basically, credit is important because there's always going to be some time in your life when you need to open a line of credit to get something that you really want, whether that be a house, whether that be a car, whether that be a credit card. There's going to be a time, okay? And for most people, what happens is it's not a matter of if someone will, because at this day and age, anybody will lend to you, whether you have good credit, bad credit, or anything. But what I will tell you that makes a huge difference in why credit is important is because the interest that is tacked on to what you owe back is like night and day difference. Take this for example. I'm gonna throw this up on the screen, and basically this is just a breakdown example of someone with good credit versus someone with bad credit or no credit. Basically, they are trying to lease or finance the same amount, and they're trying to do it for the same amount of time. But as you see, the monthly payments are $212 difference, all because of interest. Interest is basically what you would be charged in collateral for lending that money out to you, okay? People who have great credit or excellent credit have a lower interest rate than people who have no credit or bad credit. So credit is important for payback purposes. Whenever you need to borrow that money, you want to make sure that you're paying as close to the amount that you borrowed back as possible. And it's important because it shows that you're basically trustworthy. It shows that you can be trusted with multiple amounts, and it shows that you are a person of your word. It shows that you can handle finances and you can handle making sure that things are paid, and that you have a good, healthy relationship with money. So guys, now that you have the basics of credit, what it is, what it's compiled of, why it's important, what you should do to either build credit, rebuild credit, or maintain credit is a few things. And I'll talk to those builders first. So for people who are building or people who are rebuilding, you guys are kind of in the same category. And believe it or not, no credit is also looked at kind of as bad credit because there's no way for them to know. So, I mean, you guys get put in the same category. So the best thing that you could do to start rebuilding or building is to partner with your bank and talk to them about getting a secure credit card. Secure credit cards are perfect, and this is actually what I did to start rebuilding my credit on my own. I opened a secure credit card, and the company that I use was not my bank. It was actually a bank called Open Sky. What a secure credit card is it kind of works like a debit card. You can only spend the amount that you put on it. So normally they are between $200 and $1,000. Some may be higher, some may be lower, but that's normally the range. What happens is you would give the bank an amount, and let's just say the amount is $200. If you give a bank an amount of $200, what you would only be able to spend is $200. But as we talked about before, if you max it out, it doesn't work positively, it works negatively. So of that $200 or whatever your amount is, you want to stay at or below 30%. 30% of 200 is $60. So for myself, just as I mentioned before, I would buy gas 2 times a month, $30 each, and I would pretty much pay that $30 back as soon as I use it off of one card. I would pay it back from my other card. So that's me paying it back on time every single time. If you start to do that for at least, I honestly would say 5 months, but just to give yourself a little stretch of 6 months, do that for 5 or 6 months and you will see a significant change in your credit. Now, again, just as we talked about, making sure that you keep up with it and keep it open, you kind of want to keep that going for some time. And then after a while, what you'll notice is your bank will notice that you are pretty good about paying things back and about using your credit card. So they may offer you a higher amount, or they may offer you a actual credit card and not a secure credit card. But that is the best way to start building or to start rebuilding your credit. I will leave the link to Open Sky below, and then of course all of your banks have some form of a secure credit card, so definitely check with them for that. Now, for people who are trying to maintain their credit or maybe boost their credit from just being okay to being excellent, tips that I can give you guys would be to diversify your credit. Look and see what you have and maybe how you can add or take away something that will allow you to diversify your credit. If you just have a car payment, could you add a credit card or a secure credit card? If you just have a mortgage and a car payment, could you add again a credit card or secure credit card? Making sure that you keep those accounts for a long time. Sometimes people get things like their car and they want to pay it off early, and that's great. But what you could do to pay it off early is make it a separate account and put that money that you plan to use to pay it off early in that separate account and have your payment come out of that account only. So yes, you are paying it off early, but you are also paying it on time and keeping that account for a long time. You could always refinance your loan so that way your interest goes down and you don't have to pay the same amount, but again, keeping that loan for a longer period of time definitely does wonders for your credit. And then the last thing that I can say, go hand in hand as always, making sure that you stay under that 30%, and then also making sure that you pay your bills on time every time. That will continue to boost or continue to keep the great credit score that you have. So that is all I have for you all today. I don't want to overwhelm you with information, but hopefully you guys got to learn some pretty cool things that would help you build, rebuild, or maintain your credit. Make sure that you comment down below if you learned something new today. If you have not already, please make sure to subscribe to my channel. Remember that every third week of the month I will be doing wealth videos on my YouTube channel, and then every Friday on my social media, which I'll leave my social media handles up here. I always talk about finances. My goal is to help you build wealth, and not just wealth for yourself, but wealth for generations to come. Again, hope you guys enjoyed this video, and I will see you all in the next one. Bye.